Good day to all. This is the second part of our discussions involving practical approach to operational auditing. Make sure to watch part one so that you'll be able to connect this subsequent video, which is part two, of course. Let's begin with takeaways, our additional learning points. So these discussions could be very well related to the first part. Focused operations and strategic fit, because this is operational auditing. Normally or usually we focus with the operations of a certain business or client, and we're looking into how to improve those. And then strategic, because we are looking into the long term. Hence, we would say that this, in a process view, there is a transformation process of inputs into outputs, and we want the production process as well as all other processes, including internal controls, to be efficient in doing their respective purposes in the organization. And then our view should be strategic, wherein we align operational decisions with the overall company goals. So it should be that the goals in the lower levels should be matched or aligned with those of the upper levels. We call this situation as goal congruence, although it's not discussed here. Otherwise, if the opposite is true, we call that sub-optimization. So that's the opposite of goal congruence. More of that will be discussed in responsibility accounting in your management accounting subjects. Then develop operational capabilities that support the positioning of a company, and that is very important. So anything that we do, even at the lower levels again or at the bottom, should support those at the top. So everything should be aligned and congruent with each other. Then this is another important point. We identify and link between the business strategy, so the long-term objectives for the business, the operations, and the structure of the operations should be linked to those. Capabilities of the company in terms of operational should be defined by the operational structure. So structure could be the resources that we are talking about of the business. So all factors or inputs of production, as well as all economic resources that are involved, then they are part of structure. Also, technology would play part in this. Our strategic operational audit, which is operational audit geared towards long-term perspective, should evaluate or to evaluate fit and areas for possible improvement, as opposed to internal audit again, wherein internal audit is just going to check the accuracy, evaluate whether the operations of the company are effective and efficient. It stops from there. But operational audit is going to involve about how do we improve after we are able to determine as to whether those particular items of the operations are fit or effective and efficient. Then we look for operational performance measures. We have mentioned this already in part one in terms of time, inventory, throughput, and flexibility. Since these items, if properly managed and identified, would spell great or good profitability for the business. So these are leading indicators of financial performance. Next, here are the types of operational audits that we can do to be able to provide such to our clients. So this could be function-based, in which a function-based audit deals with one or more functions in an organization. We have these examples: payroll, logistics, production, collection, and etc. So we're talking here about specific functions, not just the functional departments, although we can do that as well. So purchasing, information technology, accounting, finance, credit, sales and marketing, and etc. Because if you can notice here, the items are very specific now, like payroll and collection. For activity-based, so this would be a portion of the function. So meaning much specific of the function-based, where an activity having greater importance, for example, transporter selection from logistics and plant maintenance from production. So we can be very specific in terms of the audit. Also, we can go upwards, organizational audits, in which we will be dealing with an entire organization and how efficiently and effectively functions interact. Then we should suggest improvements to our clients. Then special assignments arise as management's request and can take a variety of forms. So we can do that as well. What defines a good process performance? Here are our absolute measures and our survival measure. In terms of absolute measures, so these are the items in which if we are going to make use of them, we would be able to say absolutely that this is a good process or the performance is a good process. So if we look into the more revenues greater than cost, which would result to higher operating income, and operating income higher than interest expenses and taxes. So we would have net income higher as well. So we have a good process performance. Next is net present value, in which, as discussed in capital budgeting, that is the difference between the present value of cash inflows involving in a particular investment proposal plan or project, which is normally long-term or strategic, less the costs of investment. Then we also have the relative measures. So relative measures, this has to be moved here, will be the measure wherein we can say that the performance or the process performance is good, but then there could be some exceptions or there could be some further qualifiers for us to be able to say that such performance or process performance again is good. So we can make use of these ratios talking about R's or the returns. R's actually here are the returns, the O's are OGs, and then return on investment, return on equity, and return on assets. So I mentioned that this is of, but then actually it's an on because that has been cleared out already in discussions for financial accounting that if we use of, that's going to involve or that's going to think about the denudation or deduction or withdrawal of the capital. Because what has been returned is the investment, the equity, or the assets. It should be on, meaning a return, a profit on top of the investment, the equity, and assets. So we stand corrected on that. Next is survival measure. So we look into the operating cash flows of the company because we're talking about the good process performance. So we look into the net cash provided by, which means positive from operating activities. Next, here are our examples of few case studies in which the results are achievable through operational audit. So we have two. First one is all about bagging plant operations, and then we are looking into the impact on manpower. So this is also on cost, as well as the transportation post-bagging dispatches, impact on truck turnaround time. So this would involve like the truck moving from one area to another and it goes back to the former area or place, and then supposedly how could that be minimized, since the shorter the time the better for the company, so that revenues would be coming in and costs also will be cut short. So normally in operational audit, although long term, we also look into the short term to analyze, we dissect the problem, because what will happen in the short run or term will contribute to the long run or long term. So this is an example of this particular case. I want to go back or to the previous slide. Okay, so this is the bagging plant operations. So we can see here the structure for a manufacturing company. We have here certain structures, and then we have also the vehicles moving from one area to another. You can notice that somehow the picture is blurred, so please adjust accordingly. Then this is the process structure for the bagging operations. So that's the second one for transport. And then for this part here, this is all about bagging operations. So going back, this is the first case. All right. So here are items under materials handling. These are the specific activities. So from silo to dispatch, and then we also have plan, invoicing, and then the waste, vehicle entry, and loading. We can also notice here the bagging part or operations. Then we have here the process structure for materials movement or material movement from one area to another in the operations of the business. So this is really possible, guys, because if we talk about manufacturing or production operations, then materials will have to move from one step or area of the process to another. Also, this is the brief description of case study scenario one, which is all about the bagging operations. So the problem here was that there's been a study as to how to minimize costs involved in the shifting of different employees that are or who are the operators, are 18 of them in charge with the operations of the machineries. So operators are studied. And then here are the job descriptions and work content of the operators. So bag feeding in nozzles, then the rotation. So again, our target here or our output is that we should be able to make a proposition to be able to minimize the cost of the company. So as proposed, there is uninterrupted production still. So they want that the production will not be affected by changes of the shifts. However, in this particular proposition, the workmen or operators are able to rest in between. So this is the proposal or plan so that in as much as the workmen or operators are really into their jobs or works or shifts, but still they're also able to rest. So that's the important thing here. Considering continuity of effective working time span, for example, half an hour, 1 hour, and so on, then many such propositions can be built. Based on wage rate, savings can be achieved through modified matrix. So take note that there are already shorter hours consumed by the employees, yet they can rest. So normally the operators or production workers are paid depending on their hours consumed in the operations or their particular hours spent. So in that case, if ever they spent lesser hours, so lesser pays to them and lesser cost to the company, so more savings later on. So here is an example of the comparative matrix for manpower development and then the deployment later on. So proposition one, discharge facility, and proposition two. So we can see here that there has been some developments in terms of manpower deployment and in terms of the shifts. So bottom line, the rest is incorporated in this proposition as well as the other or the second one. So hopefully that is clear or highlighted in your end. This is the second case study or scenario in which the turnaround time for gate in to gate out was found to be very high, meaning to say the time it took or it takes for one vehicle to get in the gates of the company and going out would be high, therefore straining the logistic for arranging vehicles for evacuation of material from packing center as well as timely availability for end customer. So from the company to the customers end. And then truckers are also loser due to high turnaround time as number of trips gets reduced, impacting capping of revenue. So the longer time it took for them to move the products from one area, so the company to the customer, then the lesser products that they can deliver to them later on would be capping, meaning would be preventing maximization of the revenue. So what can we do? The idea here is to minimize the TAT or turnaround time so that the company now can, of course, deliver more goods to their consumers or buyers or customers. So here is an example of what the company did using the time and motion study. Then Loading operation of about 70% vehicles were completed within 2 hours of loading in. Then based on this TMS or time and motion study, then they were able to get the actual time, maximum of 45 minutes for the highest capacity of vehicle, that is 60 minutes was noted. And then they wanted to scope for further time reduction in loading operation. So this is the prevalent average rate. You have 200, then 20%, and then 50% for the savings and multiplied by 300 kilometers average for 7,000 trips approximate or approximately. Next is the process owner's typical resistance. There could be some concerns about changes in the company, and changes to resistance would be always normal since it would involve dramatic adjustments to the company or organization as a whole. And here are some of the questions or concerns that the process owners would be asking or would be reacting, or concerns of them in terms of changes in the operations. Examples: we always did it this way, now of late, only following a different way. And normally the concern would be that we were okay with the previous one or the current one. We were able to do the same things, provide the necessary deliverables or outputs. And why is there now this particular alternative? So what is the point of this? In which we would be adjusting a lot more, or we would be dealing with the concerns of such where in fact we're already overwhelmed with the previous ones. Then another one is we're testing many alternates which will settle and will settle with the best. So which alternative should we really choose? Third is this is not the right time to change. Wait till dot dot dot. So if something happens. With local issues, we can't go for change. That's the fourth one. Then fifth is you tell chairman to decide when we are not there. So tell the chairman as to what will be the decision. Another is we will do it as suggested, but don't put savings on record or report. So we don't want that to happen so as not to affect the respective salaries. Then we can't do it in prevalent scenario. So this one is really inability to do it. Another is we know this exercise failed somewhere and this will not work here also. So believing that such particular suggestion or recommendation would not really be working. Another one is give us some time to think through. So one thing for much time for analysis, then we don't have desired trained staff to follow your guidance. Again, problem existing in the company. We agree, but you are to convince our promoter. So a certain person on top is handling such employees. Then for our empirical formulae for operational audit objective. So we have here the economic value added, which is a function of the savings based on the cost reduction over previous base, meaning the comparison or point of comparison from the previous values or amounts. PA is multiplicity of review in the said operational area. So we will have to check into what has been done in the operational area in the review, and PE is the post reviews newer engagements. And then the result, the product would be the empirical formulae for the EV or EVA, economic value or economic value add or added. The heightened expectations from internal audit necessitated fundamental modifications in audit's approach. And that's why we said that operational audit is really a journey towards it. And then thank you very much for listening, guys. God bless us all and see you in another series of videos.